Okay, peeps, welcome back. So today we're going to be going over our buys, sells, and dividends for the week of January 14th through January 20th. Let's get it. So the first thing that I want to pull up here for you guys so that you guys can see is we're looking at the Robinhood, or sorry, not Robinhood, Fidelity portfolio. As you guys can see, we do still have our LTCM position. It had a massive, and I do mean massive, pump on Friday, which as of the time of this recording was actually yesterday. But keep in mind, we are making this video for Monday, I believe it is. So we'll only have one trading session underway by the time you guys actually see this. But regardless, and we are going to go over LTCN here shortly after we cover all this content, but we'll get to that in a minute. So LTCN did have this humongous pump, as you guys can see. It went up $1.44 a share in one day, which is huge. That's a 15% gain. But you guys notice that we do not have HZen anymore, and now we have BCHG. So we did tell you guys before that we wanted to get into BCHG. We just wanted to start getting in at the right price, and we think that $3.50 a share is a good price. So as you guys can see, based on the also recent pump on BCHG, we only are down just a tiny amount, less than 1%. Now, does this mean we're not going to own HZen? No, we do plan on buying back into HZen. We're just not going to do it immediately. Reason being is because the charts tell us, at least to previous all-time highs, that BCHG has more upside than HZen at current prices. That does not include price discovery. Obviously, these things could just absolutely moonshot and do like crazy amounts of gains, far more than previous cycles. That is possible. Actually, HZen and LTCN. I'm sorry, Horizon and Litecoin, the underlying cryptos, did actually make new peaks on the previous cycle. So we're going to take a look here at the transactions. You guys can see the transactions here. This is the day that we sold HZen, and this is the day that we bought LTCN. So let's go ahead and take a look at these. So here's basically what the numbers would be. So we have 183.50 plus 898.19. So 1081.69 minus 993.77 comes out to about $87.92. We actually have written down that we made more money than that, so I'm not sure what's really going on here. This is the second time this has happened. Maybe there's like some slippage in the markets or something like that. I'm not entirely sure, but we'll get to the amount of profit we made recently. But as you guys can see here, we got a fill price of 183 and 180 respectively per share. I think we were counting our price to be sold at like 199 or something like that. And then we bought into the Grayscale ETF. It looks like, or Bitcoin, I should say, the Bitcoin Cash Trust at roughly about $3.52 a share. One thing that I will point out to you guys about Fidelity, not that Fidelity is a bad company or anything, but in my opinion, they could update their trading platform. The way that you make trades in here is kind of very archaic. I don't really like it personally when it comes to trading in real time. I actually spoke with someone on the phone, and they kind of showed me how to like do limit orders with exact prices and full share counts and stuff like that. Tried to place a limit order, waited for 2 hours, did not get a fill. So basically, the best option here is a market order, but understand that if you do market orders here, you might get some kind of slippage. You may not get the exact price. You may not get the full profit. But these Grayscale trusts are not available on Webull or Robinhood's, which has literally on point, perfect real time fills on their orders, which is why we use them. You have to understand we're traders and investors, so we look for exact, perfect execution, and we're just not getting that with Fidelity, but it's okay. We'll continue to use them because they do offer these trusts, and we want to be invested into them. So that's unfortunately the reason why we didn't get the exact profit we wanted and also the cost basis that we wanted on BCHG, but it's all good. We made money. That's what matters. And so with that being said, we're going to go ahead and get into the next thing here, which is the M1 Finance portfolio. So as you guys can see, we on the 16th got 57 cents from Horizon, and basically a penny from PSEC. We don't have PSEC at the moment. We may buy into it in the future. We'll just have to wait and see. So the profit is 107.74. We also did sell Verizon and Nvidia on this particular portfolio for profit, and we'll get into what we bought with that here in a minute. So that's where that total comes from. And then this is the 58 cents for dividends. And that total for the week comes out to $108.32. This is the reason why we take profit on top of dividends, because there may be some weeks when we just don't get a lot of dividends and we instead make up for that difference in profit, or vice versa. So that's just something to keep in mind. So with that being said, we're going to go ahead and go to the portfolio here. This is the M1 Finance portfolio, just so you all know. We do still have a decent amount of cash on the side. If you look at most, I wouldn't say all YouTubers out there, but most YouTubers that use this particular platform or any other platform, the ones that invest into the markets usually have a certain amount of cash on the side to be able to buy the dip. I mean, it's an overall good strategy. I mean, we all know that cash gets inflated away by inflation, but buying on the dip could certainly make up for that. So I just have to give me a second here. So we'll take a look at the buys and sells. You guys can see we'll take a look at Verizon and Nvidia too as well, but we are selling out of these. We'll reposition later. We're still going to get the Verizon dividend. It's coming up here shortly, and Nvidia, we're a long ways away from the X date, so there's that. So we've taken the funds, a piece of the funds from Nvidia and all of the money from Verizon, put it into EFC, and a small piece into Triple QY here. So yeah, basically as of next week, we will not have Verizon. Are we going to buy back into it? Yes, we are. Main reason being is because telecommunications, in our opinion, is a great sector of the market to invest in. Everybody's on their phones. Everybody has to have data, be looking at social media, all that stuff. So, why not make some money off of that? So with that being said, we're going to take a look at some of the buys that we've had this week. I think we did buy a little bit of OPP. We'll go back on that here in a minute. But just to kind of show you guys how this works. So here's the EFC buy. You guys can see our average price is higher than the market price. This is a good time for us to buy, in my opinion, because we get more passive income for less money. And there's also a potential for a profit in the future. So the next thing here we have is Triple QY. Of course, this is a very high-yielding ETF. As you guys can see, once again, the market price is below our cost basis, so we don't have any issues buying that. We have bought quite a bit of Triple QY as of this most recent week. So we'll scroll down just a little bit further here. So here's Nvidia. There's our pending sell. As you guys can see, the market price is slightly higher than the current share price. This is the time that we usually decide to take some profit. As you guys can see here, the value is slightly higher than the cost basis. And it's not a lot of money that we take in the profit, but it does add up over time. I think we made like an extra almost $2,000 last year or something like that, just doing this one particular strategy. Of course, you can't do that with a small account balance. So obviously having a larger account definitely helps. But yeah, with that being said, we're going to go back to Verizon real quick, and then we'll take a look at the actual trades and show you guys that on this platform. So here's Verizon. This is the pending sell. As you guys can see, the market price as of Friday's closing session was quite a bit higher than the average share price we have. And you can see the difference here. This is the current value, whereas this is the cost basis. If the current value is higher than the cost basis, that means you're in the money. So now we're going to go over to activity. We're going to go to the trading tab here, and we will go back to the first day of the week that we made our trades, which was basically to buy into Well, I think we had taken some profit before on NVIDIA, so that's what this is. And then our average DCA into Horizon here, as you guys can see. And then we go back here and take a look now at the 17th. So we put 120 bucks into triple QY. Basically, the profit plus the average DCA that we had for the day. I believe we put all the profit from HZen, the Grayscale Horizon Trust, we put into this. And then we have another, basically an average in the EFC, Ellington Financial Inc., monthly paying dividend stock. So I'm trying to see, give me a second here. So it looks like EFC's ex-dividend date is coming up on the 30th. So we're basically doing the dividend capture strategy here is what's going on. We want to get in before that X date so we can get as much of a large payment next month as possible. And here again, you can see triple QY. You guys know that triple QY, the Defiance ETFs, they're going to be paying probably sometime early in February. So we're also front running that X date as well. So with that being said, we're going to go over to Robinhood. Actually, before that, just so you all know, we did not receive any dividends from Webull, so everything here is still kind of the same. The portfolio is still the same. Not really much going on there. We haven't changed anything, just basically sitting on the positions, not doing much. Cash balance has gone up, so that's good. So now taking a look at the Robinhood portfolio, we did not receive any dividends from this portfolio this week. We are not adding any money. We did not add any money this week into the Yield Max ETFs. Main reason being is because we still have a few weeks before the X date shows up. However, we did add quite a bit of money to both BTBT and Cypher. As you guys know, the Bitcoin miner stocks as of this last week, if you guys watched that video, have been getting absolutely torn to shreds as a result of Bitcoin going down in value. So in the immediate short term, the spot Bitcoin ETFs appear to be a buy the rumor, sell the news, but in the mid to long term, I think it's going to be extremely bullish. I mean, ridiculously so for the price of Bitcoin and altcoins. I mean, guys, we're talking 30 trillion some dollars potentially flowing into crypto. That's absolutely historic. So something to keep in mind. We did also tell you guys that we think short term there is a possibility for a pullback or an extreme pop to the upside. We unfortunately got the pullback, but the Bitcoin bull run is coming, so keep that in mind. So we bought $40 worth of BTBT here at $2.82 a share, and then $6 worth at $2.13 a share. I can't remember exactly why it was only $6. I think that was basically to bring the average total to about 500 bucks. But you guys can see we have 143 shares. Average cost is $3.50 a share. Of course, BTBT is at $2.50 a share, so we want to pick up more for sure. And we'll keep going down here. So the next one on the list is Cypher. This is Cypher Mining, ticker symbol CIFR. So we go down to the transactions tabs here. You guys can see that we bought, we got 13.5 shares at $2.95, 3.5 shares at $2.88, 1.74 at $2.87, almost 16 shares at $2.54. So we got quite a bit of Cypher here. We loaded the boat on BTBT before we got into Cypher, just simply because of the difference in price. But we currently have 91.63 shares at roughly $3.66 a share. And again, Cypher Mining is quite a bit lower than that, so we intend to buy even more. And the other positions that we also picked up this week was some basically FEPI. That's pretty much it, because the yield curve, I believe it's the yield curve ETFs and the RecShares FEPI ETF has an X date coming up, which we're going to do our best to cover for y'all, but we wanted to front run that. So we have been buying into this FEPI ETF, which has been performing pretty well, by the way. In terms of share price, it's been holding its share price pretty well. So got to say I'm impressed with that. But you guys can see our different transactions here. We picked up roughly about, looks like maybe a total of about 2.5 or 3 shares. So that's pretty much it for this week. Mainly just accumulation. We haven't really made a lot of money in profit or dividends. Of course, we could choose to take profit on LTCN, but we're not going to, because if we were going to, we would have taken profit at 18 or 19 bucks, and we did not. Something else I want to point out to you guys, since we're not going to cover this for a few more days, keep in mind that LTCN is bouncing. We do have a potential tweezer bottom here. I told you guys before that this is a bullish trading pattern, okay? You have the tweezer top here, which we all know what happened. We had a massive crash on that. This is a tweezer bottom. This is basically the opposite. It's the bullish inverse of the tweezer top. And do keep in mind that we are bouncing off of the weekly EMAs and major multi-month support here. So this thing could be going higher from here. Just something to keep in mind. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.